Welcome to this edition of the Capital Brief. I'm Seth Berenzweig from Berenzweig Leonard here in our studio in Tysons, Virginia, joined by my colleague John Tamny, nationally known author, columnist, and vice president of Freedom Works. John, how you doing?
I'm great. Good to be here.
Great. So listen, we're talking about inflation, and inflation is, no pun intended, one of the hottest topics going on right now. And one of the things that to me is so interesting about the topic is that it is just as important of a topic as it is impacting all of our lives every day, regardless of whether we're going to buy food or fill up our gas. It's also one of the most misunderstood, not only in terms of what causes inflation, but what, if anything, can the Fed do to ratchet back inflation. Can you kick us off and talk to us a little bit about, what is inflation and does the Fed have a magic toolbox? So what is this topic that we keep hearing about?
Well, inflation is a decline in the value of the currency. Very specifically, nothing more, nothing less. Inflation is when the exchangeable value of the currency declines. Historically, what they used to maintain a stable currency was gold, not because of symbolism or sunspots or religion or mysticism, whatever it was. It just, gold was the commodity least affected by everything else, and so currencies were measured in terms of that to avoid up or down in the value of it.
Directly pegged to gold.
Directly pegged to gold.
Yep.
And what's odd is that in modern times, inflation has been wholly redefined. For one, as rising prices. Well, prices can rise for all sorts of reasons. They can fall for all sorts of reasons that have nothing to do with inflation or deflation. They've also redefined inflation as too much economic growth, as the economy overheating, which is as smart as saying, well, Tom Brady threw 3 passes, so let's bench him lest he throw a fourth. Or Michael Jordan averaged 30 points a game last year. He better not average 31 because he'll overheat. Right. Economies can't overheat because individuals comprise an economy.
Sure. And what you're referring to in terms of the pegging and the depegging was something that, and we're not going to get lost in history, but in the early 70s, Nixon disconnected the U.S. dollar to the gold peg. And some would argue because he wanted to print more money, and the federal government can create more money at its own whim, and therefore it allowed for the disconnection, which allowed for the lack of discipline, and the more that you print, the less of a value it becomes over time. And then, of course, you have a lot of other spending that's been going on through a lot of the emergency legislation and so forth. That's where we find ourselves today. But we keep hearing, I think I hear about Jay Powell more than I hear about Johnny Depp. He is, or perhaps even Elon Musk. What, if any, magic tools in the toolbox does Jay Powell have to just reach out the magic hand and magically pull back inflation?
He really doesn't have very many, which people watching at us right now, their heads are exploding. It cannot be stressed enough that the Fed and the dollar, that the dollar's exchange value has never been part of the Fed's portfolio, not from day one. If you look throughout history, in 1933, FDR devalued the dollar from 1/20th of an ounce of gold to 1/35th, roughly. To be clear, Fed Chairman Eugene Meyer resigned over his decision, so incensed was he by what FDR did. In the early 1970s, you allude to President Nixon severing the dollar's link to gold. Fed Chairman Arthur Burns begged Nixon not to do it. Burns's diaries are full of evidence that he so badly wanted to convince Nixon and his Treasury to not delink the dollar, delinking being the inflation, and he was rebuffed. And so there's not much. If you want to lick inflation, you revive the value of the currency. The Fed is not empowered to do that. It never has been.
And Ray Dalio, one of the most renowned investors on Wall Street, in his writings, talks about that day in 1973 as one of the most shocking days in the recent history of money in the United States. So it's just so fascinating how historically deep this topic is. But just keeping it to the present day, what are the factors that affect inflation? From what I see, the money supply has some relevance relative to what's the increase in the volume of money, which has significantly increased over the last couple of years, but you have a lot of other issues that are impacting consumer pricing right now. You have supply chain issues, which of course are directly related to COVID. You have some international trade and supply chain issues that are related to Xi shutting down significant parts of China. You have pricing impacts of things that are happening here. Price of baby formula is going up because the supply is dramatically down because of a whole variety of factors. So isn't it a fallacy to say that inflation is one, having its root cause in just one or two things, and two, that it's just a complete fallacy to think that Jerome Powell can just open up a toolbox and then everything's just going to get ratcheted down? Is that really how it works?
No, it's and to be clear, let's start with the baby formula, because that's a perfect example of why rising prices are not necessarily inflation. We know why baby formula is more expensive, and so if you wanted to get it right now, you would pay more. But by definition, because it's taking more dollars for us to buy formula, we have fewer dollars for other goods. A rise in a price in a market economy implies a fall of other prices, by definition. If you're paying more for this, you have less to buy other things. And so there's this myth out there, well, prices are higher, oh, that's inflation. No, baby formula reminds us of why that's not true. Then let's move to the supply chain. Look at what we had in the year 2020. We had billions of workers around the world engaged in trillions of different commercial relationships around the world. Something as basic as a pencil is the result of global cooperation. Think about an airplane or a car or a computer. It's a remarkable symmetry of workers. Only for politicians to wake up one day and say, if you open up your factory, we are going to shut you down.
Right.
Only for panicky politicians to eviscerate these supply chains developed over decades. Is it any surprise that prices are higher today?
Right.
The miracle was in 2020 how low prices were as a
Right.
consequence of this global trade. For people left and right to pretend that prices would remain the same after what was happened is more insulting than you didn't build that. And I would say it's exponentially more insulting.
Right.
But that is not inflation. A rising price by its very description implies falling prices elsewhere.
I remember when the factories got shut down, and I remember when Elon Musk went in and told his people, we're getting back in there and we're building cars, and people were losing their minds. And he was moving forward, and it was not easy for him to do that. There weren't a lot of executives that were in a position or had the authority to be able to make that happen. But it kind of reminds me of a great book that someone wrote called "When Politicians Panic." Oh, wait a minute, you wrote that.
Oh, yeah, that's right.
Yeah, I forgot about that.
It is a classic.
Of course. So if the United States Congress is not on top of all of the factors that are relevant with respect to changes in consumer pricing, with respect to all these factors that fall into it, how is it possible that the government here in Washington can really create any kind of positive impact? I mean, I know that the Fed is supposed to have a role essentially enveloped in autonomy, where they're going to be able to go in, and it's supposed to be a non-political role, and then everybody is just waiting on pins and needles to see what happens as a result of the meetings and whether they're going to do 50 or 75 basis points. Is there anything that can be done by the politicians in Washington to actually make some kind of a meaningful impact on consumer prices? For example, the FDA was slow to react on providing this one baby formula factory manufacturing facility to perhaps reopen in a way that was safe, so that baby formula can be restocked. And now the government is saying that it's going to take at least weeks to get the formula up, but they're going to try to alleviate the supply. Is there anything that can be done in Washington to address this in any kind of a demonstrably effective way?
Well, no, yes and no. The answer, obviously, I think, to high prices is high prices. As in, the high prices are the summons to the marketplace. This is what we want. This is what we don't want. This is what you need to produce. And so I find it fascinating that left and right, once again, are saying, the Fed, you must do something about this. Well, guess what? Prices are how we organize the market economy. They're the signal. You don't want an entity to intervene in the pricing mechanism. And so Washington can help by doing very little. As far as what the Fed does, oh, please. I mean, this is when at some point people are going to grow up and recognize the Fed's just not that important. The Fed projects its influence through the banking system, which shrinks by the day as a source of credit.
Right.
It's going to raise interest rates. Really, how? In a global economy in which dollars are flowing around the world, in which investment is flowing into and outside the United States, we think people really think the Fed can control the cost of credit. What a ridiculous presumption.
Yeah. Well, it's also based upon a fallacy, because the general monolithic concept that the Fed is going to increase the cost of borrowing money within the traditional banking system that participates in this national system with the Fed, that's a monolithic system, is in and of itself kind of ridiculous, because there's just such a huge portfolio of lenders that are out there today that have so many alternative methods of lending. You're talking about different kinds of lending platforms in the commercial space. You're even talking about different kinds of ways to even transact as alternatives to money now. And I know that the crypto space is going through a lot of volatility, but there's sub-lending platforms within crypto with staking and things like that, where people can actually get higher interest rates by staking coins, or just putting them in simple apps and platforms on their cell phone, by being able to get 6, 7, 8% interest rather than going to a commercial bank. So why is there this fallacy that we have this one monolithic system, and then we're going to ratchet up the interest rates, and it's going to slow the flow of lending, and everything's going to cool down, and Tom Brady's going to chill for a while? Doesn't it make any sense, really?
Thank you. It makes no sense.
Yeah.
I mean, we've had a conversation on the show before. You're the head of a law firm.
Right.
Yet you all are involved in finance for some of your clients. You
Right.
are going out in the marketplace, helping in the financial process. The notion of the Fed projecting its influence through banks that shrink by the day as sources of credit is just so ludicrous.
Yeah.
It's just not that important in the big picture of this. And I would just the one thing that people will disagree with, but I think it's got to be stressed that this notion of money supply. Switzerland is one of the smallest countries in the world, realistically, by population. Yet the Swiss franc, is one of the most circulated around the world currencies. Good money is heavily supplied.
Right.
Trusted money. There's a reason the dollar is used around the world. There's a reason the dollar is the business currency of Iran, North Korea,
Right.
Venezuela, you name it, because trusted money is everywhere. And so you never have a problem of money supply when the currency is flat in value.
Right.
But currencies that lack a standard or lack some kind of protection from their monetary authority, they're actually supplied very little. They're circulated even less. I submit to you the Venezuelan bolivar. Try to buy something with that in Venezuela. It doesn't happen.
I don't think I can use that when I buy a loaf of bread tonight.
Yes.
Yeah, I don't think they're gonna look kindly on that. I can tell you, as in further support of your position, being very deeply involved as a transactional attorney in the M&A space, whenever we have financing options that are looking to finance deals, traditional commercial banks, are they a part of the ecosystem in that? Yes, but they are a piece of a whole multitude of potential lenders that come in and try to provide creative financing options. So you have traditional lenders, you have non-traditional lenders, you have money that's coming in through the private equity community. There's all different kinds of ways to be able to pursue lending. And frankly, it's getting pretty competitive. We talk about trying to ratchet rates up to cool things down. The best way to have direct control over interest rates on lending is competition. And I thought that competition through the private sector was going to be a much more reliable way to do it than to rely on a bunch of bureaucrats in Washington.
Well, it's so important what you say. You alluded to the different ways, the higher rates you can get. And so let's just use one example, Lending Club. To exactly what you say, if you want a higher return on your money, Lending Club has different ways for you to put your money to work with them. And so it's almost an Uber for lending. And, oh, you want more risk? Okay, here's your opportunity there. by definition, banks aren't taking any risks. Their loans need to perform, so of course
Right.
they're paying very little for deposits. And and so there's this notion that well, if the Fed raises the cost of credit here, that just creates a margin opportunity for others out in this massive ecosystem of finance.
Yeah, and I think the more that you can leverage down into the private sector and get things away from the bureaucrats and to just be more self-reliant in the business world, from an institutional standpoint, looking at alternative lending, from an individual standpoint, from investing in terms of even really looking at other investment opportunities. But another topic, it'll still continue on, just unfortunately as inflation will, although we can have an open debate about what that means. So John, great seeing you again, and thanks for swinging by.
Yes.